Welcome to the REI Foundation podcast, where we cover all the steps and strategies to make your real estate dreams a reality. Now your hosts, Jason and Peely.
And welcome to Multifamily Monday on the Real Estate Investing Foundation podcast with Jason and Peely. Gonna tackle how to build out an investor summary when you have a property that you're going to be either under contract for or are under contract for, and you're going to be looking to bring in different partners or limited partners into the deal. So this is one way, and the way we do it, we create an investor summary that's comprised of about, give or take, 20 to 25 pages, depending on the depth of the project. Our investor summary, and if we were to do a scalable version, is created of really about 6 different parts: the executive summary, the investment highlights, the property overview, the financial analysis, the market overview, and then the appendix, which is comprised of a few different items. When we're talking about the executive summary, I don't know why that's so difficult for me to say today, but that basically details how we found the property, what the property is comprised of, what we're looking to do with the property, and ideally the length of term of which we're going to hold the property. Now, it also outlays some of the investment highlights. Maybe it's below market rents. Maybe we'll have the opportunity to do value adds through rubs, or we have some significant value add remaining because the interior is 100% unrenovated. Or we could talk about the submarket, how strong the submarket is, or the opportunity to rebrand a property. It's also going to give a snapshot of the purchase price, what the capital improvement budget may be, and what we're looking for from an operating capital or closing cost standpoint. So once we're through that and we've outlaid basically what our returns look like for investors, if they're going to invest $25,000 or $100,000, what our investor yield projections may be throughout the life of the holds. And lastly, how the partnership structure would ideally be broken out. Are we going to have a preferred return? What will be the split between preferred after the preferred return to general partners and limited partners? Past that, we're going to jump into the investment highlights into more detail. We're going to possibly improve on-site operations. Are we going to raise rents to bring them up to market? Are we going to implement different contracts, a laundry contract or a cable contract, or just simple things, allowing pets and adding pet fees? Once we've moved that, we'll move into property overview, which basically talks about where the complex is located, what are the amenities that are around the complex, why is the complex a desirable area to be, what are some of the business around there, some of the drivers that take you or make you want to stay and be at this property. Number 4 would be the financial overview. We're going to talk really about how it looks from a per unit basis year on year, and how our analysis or our underwriting detailed that this was a desirable property for us to really go after. Number 5 will be a market overview. And this is where we really just dive into the city itself, and past that, the submarket, because the property may be in one specific submarket that we really like because of the drivers, whether it be population growth, job growth, the density of the population. Maybe it's a working class or blue collar neighborhood that has a high demand for renting. That we're going to really dive in and talk about the market overview and what are some of the main key factors for this. And with that, we'll provide comps. What are some rent comps for our property of surrounding properties within this market, and possibly some sales comps as well, showing other notable sales in the market for like properties or even properties that have sold after being renovated. And then number 6 will be the appendix. And the appendix is basically going to cover the asset management team, who are the partners, maybe myself and other partners on the GP, who, if we have a third-party management, who is that third-party management, and why do we feel they're the qualified team member to come in and assist us in taking over this property and putting together the repositioning plan. Also, of course, important notices and disclosures that we need to elaborate for this investment disclaimer. And then lastly, it's going to comprise of real estate terms and definitions, maybe talking about what an accredited investor is, what is a cap rate and cash flow, and what is a sophisticated investor or IRR, internal rate of return. So in a recap here, when we're putting together an investor summary, and of course, you're not able to see what we're basically putting down here, but it's comprised for us of just a table of contents over about 25 pages of 6 different parts: executive summary, investment highlights, property overview, financial analysis, market overview, and then of course the appendix, which lays out who is really the team members and some of the definitions of some of the items that were included in the packet. Okay, I hope that was helpful. This is Jason from the Real Estate Investing Foundation podcast. Happy Monday. Go out there, take some action. Talk to you soon.
Thanks for tuning into the REI Foundation podcast. Check back next time for more awesome tips and strategies to launch your new you in real estate.